My name is John Finch. I'm the director of Florida's ABLE program, ABLE United. And I'm going to take probably a little bit of a different approach than some of the other meetings you have. I like to have more participation from individuals. So as questions come up, feel free to unmute yourself and ask, and we'll make this as interactive as possible. But there were some polls. If you have not answered the poll questions at the beginning, feel free to go ahead and have answer those. Really, it was two different questions. It was first, have you heard about ABLE accounts? And the second one was, do you have or do you offer curriculum on financial literacy to the students that you all serve? And so I did kind of curtail, I was telling Janice before we started, to make this a little more geared towards you all. And so I had a question for you. So feel free to put this in the chat or unmute yourself. But what do these items have in common? Education, assistive technology, doctor's appointments, transportation, legal fees. What else do we have on this list? Groceries, housing. What do you think? Go ahead and put it in the chat box. What are all these things have in common? Give everybody a little bit of thinking here. What do you think? When you think of all these different items, what do they have in common? All right. Everybody's being shy. No one wants to answer in the chat. They're still thinking. Costs, adult responsibilities, right? Isn't that the term that I think the millennials we coined was adulting, or whatever the next generation is after mine, right? Well, all of these, believe it or not, all of these cost money, right? It seems like the world we live in today, there's nothing free. Everything has cost to it and costs associated to it. And so really, as we think about ABLE accounts, and we're going to get into the nitty gritty of what they are and how they can be utilized, it's important to know that most everything in today's society, no matter if we're in school, we're getting ready to graduate school, we're starting that first job, a lot of our adult life is focused around money. Do we have I like Janice's response to her on decision making, right? Because a lot of times money goes back to the ability to increase your opportunity, but also increase those opportunities for decision making. And so another question I had, this was a poll question when you first entered, was do any of your programs have financial literacy curriculum? And so thank you for those that answered it. And so as you're going through this, there may be an opportunity for you to say, okay, maybe that's something we do need to integrate into some of our classes. Maybe there needs to be something very high level. There's a lot of resources out there when it comes to financial literacy, financial curriculum, specifically for individuals with a variety of intellectual and developmental disabilities. So, but we're going to talk really about ABLE accounts. We're going to talk about the history, how this program came to existence, how it's managed here in the state of Florida. And if you're not in the state of Florida, we will touch on some of just broad topics that apply to all ABLE programs across the country, who's eligible to enroll and maintain an ABLE account, how it works with public benefits, specifically supplemental security, income, and Medicaid. We'll talk a little bit about ABLE Trust and Special Needs Trust, look at recent changes, and then tackle frequently asked questions. But what is something our programs share in that are the same is when we were passed. So the original federal legislation that allowed states to create ABLE programs passed in 2014. The Achieving a Better Life Experience Act, better known as the ABLE Act, passed at that time, was signed into law. And what it did was create a new section to the Internal Revenue Code, Section 529A, that allowed states to offer tax advantage savings and investment accounts without negatively impacting somebody's public benefits. That's one of those big advantages. So it encourages individuals to say after-tax dollars to put into a savings or investment account to help support their health, independence, and a quality of life. And this is kind of similar to other programs or other products that exist, other financial products. So think about 529 college savings plan, maybe a checking or savings account or special needs trust. Sometimes we get compared to like flexible spending or health spending, health savings accounts, those types of products. So a lot of those unique types of features kind of all rolled into one. And so as we talk about the ABLE account and what's unique about Florida, and when Florida passed, our actual legislation came in 2015, and we launched in 2016. All right, July 1 of 2016. You all started your program. We also started, Florida started their ABLE program as well. So we have that kind of set up here, and we'll talk a little bit more about that. And as I discussed, we're specifically talking about Florida's ABLE program, but every state has the ability or option to launch their own program. A lot of them, I just kind of tackled the similarities and differences. So we all are subject to the same federal law, the IRS code, the final regulations that the Treasury put out, or the IRS put out on 529A, how states are to run these programs are the same. We also had to pass our own legislation. So Florida passed the Florida ABLE Act, and that kind of dictates who in the state was going to run the program for the state. So that has to be determined by the state. And primarily, most all of the ABLE programs across the country are run by the same program or the same state entities that run the 529 College Savings Plan. However, that's not the case. There's some that are run by the Developmental Disabilities kind of state agency, or some kind of Health and Human Services agency. So there are some uniques depending on which state you're looking at. But all of us do online enrollment. That's primarily how people go to enroll in the program, how they set up the account, how they manage their account. The differences, the real big differences you're going to see are fees. Each program is going to have a different type of fee structure. And we'll talk about ABLE United's fees at the end. So that could become as a monthly or quarterly or even annual cost. And so depending on how you utilize their account, there might be some additional costs as well. Also, who the program is open for enrollment to. Like I said, we're the state of Florida, so one of the restrictions that we have is an individual has to be a Florida resident at the time they apply. And so, for example, if they're living on campus, they would be considered a Florida resident. They'd be living or residing here in Florida and would qualify. But if they're residing in another state, or they live in another state, they can check out what that state's program is. And there are a handful of programs that are open up for nationwide enrollment as well. Also, the investment or savings lineup is going to be unique to each program. A lot of us do utilize Vanguard type of options or BlackRock or these large mutual fund type of products, but some are a little bit different. Some offer a checking account. And so really that's going to be one of the other big differences. And then also on the back end, who's keeping the record? So a lot of states, they outsource that. So there's quite a few big players, but they could be tied to a bank. For example, our program is through the Bank of New York Mellon. They have a platform called Someday that we utilize, but there's a lot of other states have different types of back end record keepers. So those are going to be your primarily differences and the same. But let's talk about Florida's ABLE program. The ABLE Act passed in July 2015. What it did is create actually a nonprofit board that kind of provides oversight, but the day-to-day running of the program is handled by myself, and I have some vendors that I work with as well. We're under the Florida Prepaid College Board. So hopefully, as the various colleges and universities are on here, you've heard of Florida Prepaid. You might have even had clients that you serve that actually, or students that you serve that actually have used Florida Prepaid to pay for classes associated with this program. And so that's important to note too, but we're actually administered by them, and ABLE program is one of the programs they run. As I mentioned, Florida ABLE does have a board that kind of provides oversight, and we have appointees from the governor's office, the Senate, the House, as well as 2 additional board members from Florida Prepaid as well. And that actually just got expanded. So, but yeah, so we have a pretty robust set of board members that help guide the program. And what I love about this program is just the different types of individuals that we serve. And so, so we have people in here like our founder up on the top left here, Jen, and her son, Sean. Jim was one of those advocates that pushed this legislation from the beginning when her son was 3. He just turned 18 this year. Maybe he's 19 now. I don't know. It goes by so quick. So it took a long time for this legislation to come to fruition, but it's thanks to her and other parents like herself But we have other people like this guy here on the right, Elliot, and his mom, Sandy. He uses funds in his account to help with his DJ expenses. He likes to DJ on the side. And then we have Alicia down below, and her mom and her using her ABLE account to save for a multi-purpose van that would help her and transport her, so a wheelchair accessible van. So that's a pretty important thing for her and her family. So let's talk about the eligibility. And what's great is a lot of the individuals you all serve automatically qualify for ABLE account. If they meet usually the same criteria for your program, they most likely meet the same criteria for our ABLE program. But just to highlight what those are is they do have to be a Florida resident at the time they apply. They have to have a disability with an onset prior to age 26. So doesn't matter their age now. We have people in the program that are in their 90s. We have people that are, we have small children. We have actually some newborns in the program that were born this year that have an ABLE United account. But the main thing is they have to have a severe disability. So not only do they have to have that age of onset, that diagnosis prior to age 26, they do have to have a severe disability. Either they are receiving SSI, supplemental security income, or Social Security disability insurance, or even survivor benefits from their family. And if they don't have that on this right side, that they have a diagnosis from a doctor that says, yes, they have a physical mental impairment, it's going to have marked and severe limitations, and it's expected to last most of their life, or at least 12 months. And so just to kind of give you a quick snapshot of the type of disabilities that would qualify for an ABLE account, we included this. This is the actual IRS listing of individuals who qualify for an ABLE account. So this is how the IRS kind of categorizes individuals. And when an individual goes to enroll in the program, they're actually going to get these kind of buckets, and they get to choose where their disability most likely applies to. So right there at the top, a majority of the people we serve are in the first two buckets, developmental disorders. So that they'd be autistic spectrum disorder, Asperger's, developmental delays, or if they have an intellectual disability, that would also qualify. But you can see we have psychiatric, nervous, congenital anomalies. So Down syndrome, for example, would qualify for an ABLE account, and many others. So usually I tell individuals if they have a diagnosis that requires routine upkeep, or they have to take additional medical visits or appointments to keep up with that type of diagnosis, then they would probably qualify for an ABLE account. That's important to know. Also, what's unique is who owns the account. It is the individual with the disability. Not only are they the beneficiary of the account, but they're also the owner of the ABLE account. Now, we know not in every situation people are able to manage their own account. Maybe they don't have the capacity to, or maybe they choose not to, and they can actually have somebody else manage it for themselves. So a parent can set these up, a guardian, power of attorney, or an organizational Social Security representative payee. I will note that in December, this is going to be expanding. So hopefully in the next few weeks, we'll be rolling this out to also include siblings, spouses, grandparents, so a much broader list of individuals who can open and establish these accounts. And that's based on some final regulations from the IRS. And as we go through this, if you have specific questions, feel free to put that in the chat box or let me know, and we will do our best to get that. But we'll have some open discussion at the end as well. So let's tackle enrollment. As I mentioned early on, enrollment is done online. ableunited.com is our website. And so that's where individuals would go to enroll in the program, to manage their account, and to get it all set up. When somebody goes to open the account, if you think of other financial products you've enrolled with, we're going to need some identifying information like date of birth, Social Security number, physical address. Also, if somebody is doing this on behalf of an individual, documentation that substantiates their authority, so guardianship paperwork, or power of attorney if they're an adult. And so that's also changing as well, hopefully in December, where it's going to be more of a self-certification that you have the authority instead of us collecting that documentation. Also, banking information will be needed if you do online, a checking or savings account. That's the primary method for connecting that account, putting money into the ABLE account. If somebody removes it, they can put it back to that connected bank account. So that's going to be assisting. There's a minimum $25 deposit to get the account started. And then also the investment selections. And so on the right here is a kind of a splash screen of what somebody would see when they go to enroll for the first time. And it's going to ask you some questions. As mentioned, this is an investment or savings option. It's created to meet the needs of the individuals, depending on what they want to use the account for, whether it be long-term saving, mid-time investment, just something that they can stock extra funds in. All those types of different strategies work with an ABLE account. And so from the investment side, we have 3 pre-designed portfolios to meet the needs of most investors. Those are risk-based pre-designed portfolios, so conservative, moderate, and growth. And those have associated risk associated with them. But we also have individual fund options as well, money market and FDIC option, and a U.S. stock, U.S. bond through Vanguard, and an international product through BlackRock. So it's good to know that these companies that manage trillions of dollars are the ones that are actually investing your funds. Performance and anything you need to know about investments, you can visit our website. There's a investment savings tab that people can learn more about how these different products work and what's best for them. It's important to note that once funds are invested into the program, they can only be moved around twice per year. That's a federal rule. Anytime new money comes into the account, they get to pick and choose if they want it to be a savings or investment or both. It's up to them. So it provides a lot of flexibility on how people utilize this account. And so next, money's in the account. How do we get money in the account? Who can help with that? The great thing is generally funds that go into the ABLE account generally do not count as income for the individual. So that's important to know if they're on public benefits. So it's a great way for mom and dad, for relatives, for other friends to contribute or give money to an individual without negatively impacting them. It is limited to $15,000 per calendar year, and that's from all sources. So if mom and dad put in $10,000, if the individual is working and they put, let's say, $5,000 in it, then they're going to hit that maximum limit. However, if they are working, I know a lot of this curriculum is to help people get employed. If they are working and not saving for retirement, do an employer-sponsored type of retirement plan, that be a 401k or an annuity plan or something like that, they can actually contribute above that $15,000 annual limit, which would also allow them to take advantage of the savers tax credit, which could reduce their tax burden. So it's pretty unique that you could use an ABLE account as a retirement vehicle. Sorry, my light cut off there. Also, individuals who have 529 funds, whether that be in their name or family members, they can actually roll those over into an ABLE account. So it provides some just flexibility in how funds get into the account. And one thing to know is that, as I mentioned, although this is not counted as income towards an individual, if a person put their earned income into the ABLE account, it would still count as an earned income for tax purposes as well as public benefit purposes as well. So so somebody is working, they're like, well, I'm just gonna put my whole paycheck into ABLE, and then it's going to shelter that and not count as an income, so I can get my SSI benefits. That's not the case. ABLE accounts shelter resources, not income. So that's an important thing to know. And we really do try to make this a very flexible tool for individuals. We try to make this a great way to allow family members or other individuals to contribute to somebody's account. So when somebody opens an account, there's an option to create a gifting page, kind of like a GoFundMe page, so that they can get a unique URL they can share with friends or family, and allows people to contribute to their ABLE account. So it's a pretty cool tool that we're starting to see utilized, especially down the holiday season. That said, I don't need anything, but hey, if you want to, send me $50 to my ABLE account, I know I could use that for a variety of things, which we'll talk about. Now, I know this is everybody's favorite part, is spending, right? It's that time of year where you're bombarded with ways to spend money, and ABLE accounts realize that depending on what your needs are, there could be a variety of reasons when you need to take money out of the ABLE account, and we want to make that as flexible as possible. So the most common way is an electronic transfer back to that connected bank account. If bank accounts are added in later, those can be added at a later date, and then also can receive funds as a withdrawal from an ABLE account. People can request a check online or with a phone, or they can mail a withdrawal request as well. And we also have an optional ABLE Visa prepaid card. So it's powered by TrueLink, which is a large entity that helps manage that card. So it is a third-party vendor, but it's what they call a prepaid reloadable card. And so it's attached to the ABLE account, but you have to preload it with a set amount of funds. And we see a lot of families, especially the age demographics that you all serve, utilizing this feature, because first of all, it limits how much money you can put on the card. So let's say mom and dad are like, hey, we want to put $100 on it, and you can use it to go out with your friends. You can use it to go, out to eat, to grocery shop, to buy stuff on campus, clothing, whatever that may be. And they can set a certain amount on it. So that limits people from using the whole ABLE account. But people can do that. There's a small fee, which we'll talk about. It's $2.50 per month, but it can be used anywhere Visa is accepted. So that's a really cool feature that a lot of families like to use, especially a lot of families during transitional periods or young adults where they are a little more out there exploring the world and need a way to spend money without impacting their benefits, right? So ABLE card, great way to do it. It's important to know to keep receipts when somebody makes a withdrawal from the account. So for example, if you're saying, hey, I'm putting $500 on the ABLE account, this is primarily going to be used for groceries. And then the feature of the ABLE card actually tracks where expenditures are. And so just keep those receipts. We won't ask for them, but the IRS or Social Security Administration could if somebody is on SSI. And also when you make a withdrawal, you get to choose. Do they want the money to come out of the investment side, the saving side? It's really up to them, and it provides that flexibility. But that's a really cool feature. And so you might have seen this picture before here, but what can people use the funds for? And this kind of ties back to the very beginning, right? Expenditures in life are all over, right? It could be buying weekly groceries. It could be paying for an Uber to go to the movies. It could be going to the movies. It could be educational expenses, thinking books or clothing, assistive technology, employment, training and support, legal fees, just about anything that is going to help that individual either maintain or increase their health, independence, or quality of life is a qualified disability expense. So really ABLE accounts are just such a flexible way to allow people a little more freedom and a little more opportunity that they wouldn't have otherwise, especially for those that are on public benefits. So I love how ABLE accounts are. There is, if people are saying, hey, I have money in an ABLE account and it's just not working for me and I need to close it down. So they're taking the money out and it's not going to be a qualified disability expense. They are subject to tax on the earnings portion plus a 10% penalty. So to keep that in mind. But other than that, this is probably one of the biggest questions we receive is, can I use it to go on vacation? And yes, can I use it to buy an iPad? Yes. And so it's really anything that it's for that individual. You can't go and give the money away. You can't use it to buy alcohol, tobacco, or gambling. But outside of that, usually it is a qualified disability expense. So it's and you get tax-free growth on top of that. So it's pretty a great feature. All right, so what does this cost, right? It sounds too good to be true. And the great thing is the way that we're set up here in the state of Florida is we have a appropriation to make this program exist in the first place. And so we want to make this the most affordable, ABLE solution for Floridians. So there is no application fee or monthly maintenance fee. There is that minimum $25 contribution, but it is that beneficiary, it is that individual's money. If somebody wants paper statements instead of online statements, it's a $10 annual fee for that. And then a monthly fee for that optional Visa prepaid card at $2.50 per month. So keep that in mind if that's a feature some of your students may want. And then our investment fees do have a fee tied to them. Our FDIC option is free. There is no investment administration fee, but the other ones can be up to 0.29% annualized. So that comes out of the return. So when somebody looks at the returns on the account, those are net of these fees. So less than, is that 29 cents for every $100 or so you have in the account, which isn't too bad. Yeah, so I got a question here, and good point, Jeff. And if you have questions, please use that chat box. Can recreational adventures be covered? Yes. What was interesting to see during the pandemic, a lot of individuals, there's a lot of group homes or assisted living facilities that would use an ABLE account for like their annual vacation. Like they would go on a cruise or they go to Disney. Well, during the pandemic, a lot of people couldn't go anywhere. And so the average account balance has grown significantly over the last couple of years. But this last summer, as I was preparing for, I was telling Jazz, we have a board meeting coming up in December, and we're kind of looking at how accounts are being used. And we saw a typical pattern from 2-3 years ago during the summer where a lot of people started dipping into their ABLE accounts. So in net transactions, the amount of money coming into the program was actually quite less. And that was because people are going out more, they're going on cruises, they're taking trips. So yes, because that's part of giving an individual additional independence that they wouldn't have had otherwise. And also they could be learning opportunities as well. So good questions.
Thank you, John. I did have another question.
Yeah.
When the with $15,000 being the limit per year, and you said you have someone as young as a newborn who has a United account.
Yep.
There a limit on how much can be in that account?
That's a good question. And so we kind of touch it a little bit here in the next section, but it is, it depends on if they're a supplemental security income or not. If they're on that SSI check, that monthly check that helps pay for some basic living expenses, Social Security will not count the first $100,000 in the account. Anything above that would count as a resource for SSI benefits. If somebody's not on benefits or on other type of benefits, so whether that be Medicaid or SSDI or something like that, these accounts can actually grow up to $418,000 before they can no longer contribute. So, and we see a handful of accounts that have opened since day one that are significantly over 100,000 now. And so really it depends on the capabilities, but no. So the hard limit is 418 for Social Security. It could be 100,000 if somebody's on SSI. But good question.
Thank you.
All right, so I'm going to touch on public benefits. I don't know how much this interacts with you all, but I know for ABLE accounts, we often see, for an example, 40% of the people we serve that have an ABLE account in ABLE United's program are on supplemental security income. It'd be interesting to see, do you know if some of your students are on public benefits or some of them have public benefits? That would be interesting for me to know. But I kind of give you the basics on these and how it relates to ABLE accounts. So Medicaid, primarily the one you probably all are familiar with most is the Medicaid iBudget waiver through the Agency for Persons with Disabilities. That helps pay for a variety of expenditures, but they do have resource limits. $2,000 is the most somebody can have on the hand, but they help provide a robust set of services, or they might be on Medicaid state health plan. That's important to note as well. Generally, funds in the ABLE account, even taken out of the account, are disregarded. So it's important that ABLE accounts can shelter assets, resources, not income. And then if there's any funds left over, if the person passes away, those funds would go to the beneficiary's estate. It's important to know. If they're on that supplemental security income, that monthly check, there are some additional rules. The first $100,000 doesn't count as a resource. Anything above that could count as a resource. And so that's important to know because it may cause somebody to be over-resourced. And if that's the case, they could have their benefits suspended. Also, housing expenses, and I actually have an example here on the next slide. But we usually tell, if you're working with somebody that is interested in ABLE accounts and has SSI, to check out the online manual Social Security makes available. So that's going to provide all the details on how these accounts are to be, or how Social Security looks at these accounts. So we have a practical example of somebody with SSI wanting to use their ABLE account to pay for housing. So someone in May wants to pay for their June rent, so they take money out of May, they withhold it to, or they retain it past the end of the month into June, then they pay their landlord or their mortgage payment or their dorm fees or whatever the case may be. Well, that would count as a resource at the beginning of June. And so it could count as and cause them to be over-resourced and have their SSI suspended. So important thing to know there, have the ABLE account pay it directly. And then also, this is the over-resource limit. So if someone gets close to that 100,000, anything above 100,000 would count towards that $2,000 resource limit. So just monitor it if somebody's on SSI. That's just some kind of words of wisdom. I won't touch too much on the other federally means tested programs, but what's unique about the population that we serve is they are eligible a lot of times for other types of federally means tested programs. So that could be a variety of Medicaid programs outside just iBudget waiver. It could be something that's related to their health, kind of like health insurance. There's important things to know there. Although ABLE accounts are subject to Medicaid recovery, it would go to their state, and their state could be subject if they're over 55 and some other rules. Other type of programs that some of your clients may or some of your students may have in the future is food nutrition, SNAP. ABLE accounts don't count. If they're in HUD housing, that doesn't count. One thing that is unique is the Department of Education has not put out any guidance on how, when someone's applying for FAFSA, do ABLE accounts or not. Talking to our legal team is that they believe ABLE accounts are exempt as a resource when filling out the FAFSA application, but definitely that's something you might have to look into.
John, could you back up a minute on the subsidized housing, a couple of slides back? Could you clarify for us? You say, so the ABLE account doesn't count for those who are in subsidized housing?
Yeah, so part of the HUD application and subsidized housing is they count assets and resources. How much money do you have? ABLE accounts are not subject to that limit. So they're kind of, they're disregarded when determining that eligibility. So that's important to know.
Thank you.
So, yep. So that's what's really unique about ABLE accounts is just the way they're created is to help individuals foster independence, give them opportunity, and to really lift some individuals out of poverty where they were restricted to only having $2,000, which, in the grand scheme of things, $2,000 is not much for an emergency. Or if you were trying to put any significant payment on a house or do modifications, $2,000 didn't really get you far. But now with ABLE, you can hopefully achieve that and be able to save money aside. So I won't touch too much on special needs trust just because I don't know how much this impacts you all, but there are some rules because ABLE accounts are not special needs trust. We also, if that's the big takeaway, I think from these screens is that ABLE accounts are different. They can work in conjunction with third-party special needs trust, but really special needs trust is that kind of long-term estate planning. If an individual has what they call first party, so they have the money, whether that be a settlement, maybe they're working too much, they could take advantage of a special needs trust to keep their Medicaid benefits intact, because that's the whole purpose of a special needs trust is to really allow individuals to take advantage of Medicaid. Third-party special needs trusts, these are usually set up by parents, families, grandparents. Really, if they pass away, there's funds set aside that's going to help somebody continue to be as independent as possible and to be eligible for those Medicaid benefits. So I have some little bit of differences here and how third-party special needs trust can be used to fund ABLE accounts. So that's one of the primary reasons or primary ways people utilize their ABLE accounts in conjunction with special needs trust. ABLE accounts are flexible. So while a special needs trust has a trustee and they have to get permission to get the funds out, ABLE accounts allow people to say, hey, go online or call, get the funds out. So it's a unique thing. I did want to touch on recent changes because this does impact some of the individuals, specifically this last bullet point here. I mentioned it before. 2017, they allowed They passed some additional flexibility that allows 529 savings and investment accounts or 529 accounts roll over to an ABLE account. And it could be just about anybody in the family. So it could be siblings that might have had leftover 529 accounts. They can roll those over to ABLE. It does count towards that annual contribution limit. So there may be a situation where maybe somebody thought they were going to go to college and had a significant amount of savings over 15,000. Then they would have to roll that over in multiple calendar years. And then also that top one, ABLE accounts can be used kind of as a retirement vehicle. And then here's the final regulations. I mentioned this briefly. We are expanding based on this guidance from the Internal Revenue to expand who can open and establish these accounts. So that's going to be a unique opportunity for grandparents or for friends to use that. Something we are tracking is the Age Adjustment Act, which would allow, would actually expand who's eligible for an ABLE account, where a diagnosis can occur at 46 and younger versus 26 and younger. So hopefully that would really expand the opportunity this program has, not only for young adults or for individuals who had a diagnosis prior to age 26, but really help those that have later in life types of diagnosis. So we're going to touch on frequently asked questions, but if you, in the meantime, if you have questions, go ahead and formulate those. Get ready to unmute yourself if you want, or put it in the chat box, and that will help me as we go through this process. But one of the number one questions we have is like, okay, so I opened my Able United account while I was in Florida. Now I moved out of the state. Do I have to close my Able United account? And the answer is no. The individual only has to be a resident at the time they apply. And then after that, it doesn't matter if they move out of the state or not, but we would always recommend when somebody does move to a different state to check out that state's ABLE program. There may be unique benefits for their residents. One of the big ones is people that some states have state income tax. And so if you move out of state and you have a state that has state income tax, there might be state income tax deductions if you contribute to an ABLE account. That's important to know. And I do see a hand raised. Geraldine, do you want to go ahead and unmute yourself and ask questions?
Yes, I had received a flyer about this, and I scanned it and sent it to parents. And the response that I kept getting back from them was, we already have an account for our child. Why do we have to do this? Is this beneficial? And I didn't really know much about it. So I just said to them, visit the website, So here's my question to you. Is it possible that I can have like just several bullets just saying why this is beneficial? Because the flyer just generated so many questions that I said, you know what? I'll get more information and get back to you. But
that's good. So you're probably talking about one of our brochures here. So I have a wrap card.
It was
okay, a one pager. Yeah. So that's the problem with ABLE accounts is you can see this is an hour presentation, and because I usually have an elevator pitch that I send to people and say, hey, here's high level the advantages. But when people start talking about finances, it's really complex, right? When you think about saving for retirement, when even you're opening a checking account, right? The questions of like, okay, well, do I need checks? Is that still a thing? Do I need a debit card? Where are the fees attached to this? And so usually I tell people there's kind of three advantages of an ABLE account. It really is, does somebody want tax-free growth? The ability to put money aside in a person's name that it can grow. Are they on public benefits, and do they need a way to save without going over $2,000? And really the other one is the flexibility and independence. Do you need a method or a way where you can have a prepaid card, you can preload it, they can use it anywhere Visa is accepted, to give somebody a little more flexibility, a little more freedom and independence. And those kind of are the advantages of an ABLE account. But we do have like a one pager, but we've noticed with those one pagers, we get more questions than answers. So, but I would be more than able to share that with the groups. And then we also have, like I said, these, I was going to say this to the end, but we have these brochures, these little booklets in English, Spanish, and Haitian Creole that we can send to you free of charge to distribute to students. And we also have and if there's a possibility where like, hey, we have little gift bags that we can do. We have little sling packs. So if there's opportunities where you have an incoming class and you're saying, hey, can we give them like an Able United package of goodies? We would be more than happy to do that with your team and make those available. So that's something we can keep in mind as well. And always open and have the opportunity to present to parents. So if there's any kind of parent nights or anything educational for the parents where you kind of have an open house, we could have a booth there. Although I'm one person, we have brand ambassadors across the state that are boots on the ground, literally, where it's actual account holders or family members of account holders who go out and speak about ABLE or pass out material on ABLE accounts. So that's always a possibility as well. That's a long answer. So,
but thank you though.
Someday our back-end records administrator. That's just something people will start seeing this Someday logo and Someday and like, well, who's that? They're basically our customer user-facing interface called Someday. Important to know about filing taxes is something that people need to keep in the back of their mind. When they make a withdrawal, it will initiate tax forms. Those are usually just for record-keeping purposes. An individual would only have to file it or claim it if they're using all their ABLE accounts and they have no qualified disability expenses. But I don't know of anybody, just because qualified disability expenses are so broad and includes basic living expenses like groceries, which I think hopefully we've all purchased in the past. And this talks a little bit about what happens to the account if somebody passes away. But I really want to just see how we need your help. And this kind of goes back to Geraldine, because just like your program, we're 5 years old, right? And although we're 5 years old, just the amount of individuals that have no idea about ABLE accounts or have even heard of ABLE accounts or ABLE United, usually the first thing we hear is, oh, ABLE Trust. I heard of ABLE Trust. And I said, no, that's we actually did a webinar with them a couple weeks ago with Publix and ABLE Trust and ABLE United, and we're hopefully going to be doing one in Q1 where it says, similar names, different purposes or different missions, something like that. Because ABLE Trust, you might be familiar with, helps with educational needs, helps with employment. We're really focused on savings and investment. And so I have this interesting quote here for George Washington Carver. And I always love when I get a quote, I kind of like to look at the history of when this was written, why it was written, what was the kind of thing. So the key is education, right? That's what you all are in the game for, is to educate individuals, because we know that with education, with training, with those tools, it really does provide the key to unlock the golden door of freedom. And this was an interesting quote from George Washington Carver, who was trying to get Booker Washington to become a teacher at his college. And so he was kind of saying, hey, this is a great opportunity for us. And so I think education is key, because I think so many people don't know about ABLE accounts. And so if you have a financial literacy course, how can ABLE accounts be part of that discussion? It's something to consider. I know, for example, the CFO's office has the My Money. If you haven't heard of them, it's a great curriculum from nuts and bolts, like, what is money? What is cash? What are coins? All the way to savings and investment. And so maybe there's an opportunity where ABLE accounts can be added to that. Are there opportunities where you provide parents and guardians resources for them or for their students? ABLE has a lot of materials. Like I said, we have all kinds of materials. We could even do like little book bags or whatever you think would be beneficial to family members and to the individuals. We would more than happy be able to partner with you. And then I think this kind of touches on Geraldine's question earlier, is what are those key advantages of ABLE, right? It goes back to, what's that student's need? Do they need tax-free growth? If they're on benefits, do they need a place to shelter resources? Or do family members say, hey, I want to help them, but now that they're 18 or older, I don't want to impact their benefits or impact their eligibility? ABLE accounts could be that solution. So always looking for ways and opportunities of how we can partner to work together. If you need us, ableunited.com is our website. We have a toll-free number. And I'm going to go ahead. I should have put my personal email in here, but it's pretty easy. It's john.finch@ableunited.com. And I think all of our contact information is in Hoover, right? If I'm not mistaken, right, Janice? Yeah. So if there are opportunities where we could partner together, or if there's ways where you think your students might like some promotional goodies, we'd be more than happy to put together something for them as well. So, but I'll go ahead and open this up for any additional questions that you might have.